The consensus view for Eurozone interest rates, I think, is that in the next 12 to 18 months, they're not going to go up. I think the gentleman said not before 2017. What you collectively think is the risk of this happening earlier, i.e. a negative surprise on Eurozone interest rates rising, which of course will have a pretty dramatic effect on anyone who now funded, 3 months Euribor plus small spread.
Maybe from my point of view, it's a little bit different compared to what you just said, because I'm very little concerned about a surprise on the European side of the interest, that all of a sudden peaks, because the long-term factors that are visible are not likely to change. I mean, you won't go most likely to Greece, even though that's not so very relevant, and find it prospering overnight. We saw an interesting recovery in Spain, which, when we discussed it last year, very few, I was one of those, would have predicted it. This is not very likely that Europe can sustain, here I agree fully with you, within the next 3 years, a significant rise in rates. This is not what I think, but currently we have not experienced the reversion of the trend in interest worldwide, not really. And when the Fed increases, stopping quantitative easing is the one thing. I think it will come to the minds of a lot of investors that this trend is going to happen here in Europe too. And you may be burned if you don't put it into your calculation. If you think what happens and when I do a long-term investment, have I factored that in? I don't think that many who invest in Germany or Europe today are really thinking of increased interest rates. When the Fed will change its tendency and really increase rates on a longer-term basis, I'm pretty convinced that then reassessing how risk to GDP growth in the country you invest will come back to the minds of the people, like you had it in Germany months ago, when all of a sudden the stock market prices fell by 15%, because all of a sudden, which we had all along the lines, people became aware that the fundamentals are not really supporting prices. We are back on track, as we all know. But this moment, which I call the months of reassessment, will come when it happens somewhere in the world in a meaningful place, because they will experience, will land here too.
I think you should always watch the difference between the US and ours and the European. And Draghi will come under pressure at one point if that increases over 250 pips. And at the latest, if that happens quickly in the US, then Europe will need to follow, because money will simply flow out of the European economy. So that's one to watch, I think.